Hello, everyone. As Brian has already done, he's introduced me, but I am Rachel Thomas, owner of Rachel Marie Accounting and Tax Services, and I do offer a variety of services other than taxes. I also do bookkeeping, insurance, whether it's life, home, auto, small business insurance, also credit repair and a variety of other little financial things. And today I'll be speaking with you all about taxes for farmers. Okay, and again, this is just a little introduction of me. I'm here from Baton Rouge, Louisiana, graduate of Southern University. I'm an accountant, business owner, 22 years in the tax industry, and also auditing, general ledger, and federal aid, work with grants and things of that nature when I work for the federal, with the state. And today we're going to talk about farm business taxes, Forms 1040 and Schedule F versus the Schedule C, and deductible farm expenses and credits. Farm taxes. So income tax are basically farms are taxed on sales of raised and grown product. Any farm product purchased for resale, custom work that's done on a farm, any farm related services, distributions from cooperatives, and then also you have the self-employment tax. The self-employment tax for farmers. So the self-employment tax for farmers, basically you have farmers usually experience years of low income or losses on their farm. So therefore that they're able to write those things off their expenses. So that gives them usually a zero tax liability, so they don't have that self-employment tax. Also, if you've generated income and the income is less than $400, then that will not be taxed either. Self-employment tax on income above $400 will apply. At age 60 or below, 2.5 million is exempt from income, and above age 60, 3 million of agriculture income is exempt from net income. Estate and gift tax. Estate and gift tax. Transfers of money, property, and other assets, which are transfers of wealth, applies to large gifts made by a person who is still alive, large amounts left to heirs when they die, 40% tax rate on anything valued above 11.7 million. The giver of the gift pays the tax and files a Form 709. Schedules and forms. So usually there's a Form 1040, which every individual must file, whether it's with a business, if it's a small business owner, or if you're just filing as an individual. If you were a corporation or then you would do a
Mr. Blandon.
So all individuals will file a Form 1040, whether they have a business or not, a small business or LLC. If you're an S Corp or a corporation, you would still do a Form 1040 for your individual taxes, but then you would do a separate tax form for your business taxes. And then you have a Schedule C. The Schedule C are for small businesses, sole proprietors, and LLCs. They use this form to basically state their profits and losses of the business. And the income and losses from this form usually generates to the 1040. So the two are combined, joined together. The 1040 is basically like a summary, is the informational of all your personal information, and is a summary of everything pulled from all of the other forms. And then you have your Schedule F, which is profit or loss from farming or farmers. And basically you will report also your farming expenses and revenues on this form. Form 1040, that just said, is a summary of all tax information, is an individual tax return. Schedule C and F for sole proprietors and LLCs are transferred to the 1040 form. W-2 wages, salaries, and other transferred information to arrive at your adjusted gross income, which is your AGI. The Schedule C records profit or loss from the business. And these are expenses such as office expenses, supplies, utilities, marketing such as advertisements, contract labor if you're 1099ing someone to do some work for you, a freelancer maybe, or something of that nature. Gross income minus expenses gives you your total net income, which arrives on, again, that's Form 1040. Schedule F is also a profit or loss from forming. It also transfers to Form 1040, line 18. Some of the expenses for this form are management, irrigation, pruning, soil and water conservation, fertilizing, frost protection, and spraying. Then we have the deductions and credits. Form deductions are ordinary and business expenses, which are wage to employees, cost of livestock and feed, fertilizer, seeds, interest paid on loans that occurred within that year, with any interest that were paid within that fiscal year, and insurance. Form credits allows the current year income to be combined with at least 3 years for reduced tax liability or increase of refund. Form of school tax credit, rehabilitation of historic barns. I'm sorry. And again, this is my information to the business. If you have any questions about anything, if you guys have questions about anything that I did not mention that you would like to know about, do feel free to ask.
So I have one question that's on the chat. Is farm rental income a part of that income that's not taxable?
Is farm income, say that again? I'm sorry, Brian.
Is farm rental income a part of income that is not taxable?
Yes, it is.
Want to go in detail?
Sure. So farm income from rental, basically, if you are renting out your property or to someone to for agricultural purposes, then that income is not taxable. And there are certain things in the agricultural field that are not taxable, such as, again, like I said, like some of the livestock and things of that nature. And there's a list of them that wouldn't be taxable, and it's on the agriculture.
Okay, guys, y'all can ask. We have another question. Where do you put on your 1040? Where you put that in?
Where do you put what in?
I guess the income that's not taxable.
Well, if it's not taxable, then you wouldn't report it. Any income that's not taxable wouldn't be reported.
Okay. All right. Hey guys, y'all willing to unmute yourselves and ask any question you like?
Even if you get a 1099 on that rental property, you still don't have to report it.
If you, the renter?
I'm the renter and I receive a 1099 each year, a form, and I've been reporting it for 11 years and it's been counted as income. So
you're probably reporting it as rental income, which would be on a Schedule E. Schedule E as rental income.
It is coming out on a Schedule E. So I need to do an extension to make that correction.
I'm sorry, can you repeat that? It's breaking up a little bit.
Oh, I apologize. Do I need to do some kind of a tax extension or something to get my money back on it?
Well, you wouldn't do a tax extension on it. Basically, I'm not sure who filed it, but it was filed inappropriately. But if you were to try to get anything back from it, you would more than likely do like an amended return.
Amended, okay. All right, thank you.
You're welcome.
And Rachel, that will only go back a certain number of years, correct? She said she had been filed for like 10, 11 years. So how many years could she go back?
Yeah, so at this point, and I had a case where a guy, he was trying to go back to 2016, and it's usually 3 years back. However, I would say just try it and see what happens. Because like I said, I had a case where a guy had, I want to say back through 2015. And when I called the IRS, they just said, go ahead and amend it, anyway. So not sure what they would really do, or if they would actually accept those, but that's what was told to me. So I would just go ahead and get them amended anyway.
Could you cover Schedule Fs in
Mhm.
more detail?
Any particular part?
I'm not fluent in this. I just know my participants wanted more about information on Schedule F.
Okay. So basically, just like Schedule C, the Schedule F basically is the same thing. It reports your gross income, whatever you've made from income you've made from farming. And then it also reports your expenses, which are reduced, deducted from your gross income. And again, those things are transferred to Form 1040 to give your AGI. However, once the expenses are reduced from your gross income, then you come out with net income, which would be a profit or loss, basically. And again, some of the things and deductions that can go on that Schedule F or management expenses, irrigation, pruning, water and soil, fertilizing, frost protection during cold seasons when the weather's bad, so want to protect your crop, in spraying. And then some of the other deductions were wages to your employees and or contractors if you plan to issue 1099s and not actually have employees, then those payments are also deductible on the form Schedule F. Cost of any livestock and feed, again, seeds, any interest paid on any loans that you may have taken out for business purposes, and also insurance. And there are others too, such as if you purchase, machinery, equipment, any type of assets, a tractor, things of that nature, those things will also be deductible. And depreciation of those assets are also deductible.
Okay, can you hold for a second? I got a question. Did you say purchase livestock is not taxable? Purchase,
Did I say purchase livestock?
yeah, it's not taxable.
Right. As it relates to, again, the agriculture side, then there are some livestock that are not taxable, yes.
All right. And so Ms. Shantri Hawthorne, Ms. Hawthorne asked the question, vehicles used for farm operations, how long can you count deductions for purchase of vehicles, insurance, maintenance?
So the maintenance, basically whatever maintenance occurred within that year for that asset, then you can claim those deductions. However, for the asset itself, it can be depreciated over a number of years. So that could go like up to 10, maybe even more, maybe even longer. It just depends on the life of the asset.
Okay. Another question by Mr. Bunch, Mr. James Bunch. If you can pay a contractor over $600 in a year, do you issue a 1099?
Yes, anything over $500, you issue a 1099.
Guys, this is your opportunity to ask questions. You can go right ahead.
Rachel, I was going to ask you a question about the Schedule F in terms of showing profit and loss. I know a lot of small farmers like to show loss as much as possible so they don't have to worry about paying tax or much taxes. So would you talk a little bit about that in terms of how that could affect them when applying for financial assistance from other entities?
As it relates to applying for assistance, so the thing is with the AGI, that's what a financial institution is going to go off of. So if you're claiming, if you have a gross income of, say, is a large amount, a large number, the financial institution, they're not going off that. They're going off of your AGI, which is your adjusted gross income after your gross income after all of your expenses. So that could basically harm you and prevent you from getting like loans and things of that nature with financial institutions.
Dr. Tessman, Dr. Anthony, that answered the question.
And because basically you have to, just like with even a personal loan, you have to show that you're receiving some type of income coming in and that you have income where you are able to repay that loan off. So if you're showing a loss, consecutive years, then that's not showing that you're capable of repaying that loan.
All right. So I
That's
have another.
what I was getting at was about the idea of showing that you're able to make a profit or have successful enterprise. If you're consistently showing that you're not making a profit, which means that you're not consistently meeting your goals and objectives for your farm enterprise, then why would an entity want to invest in you as a farm business if you can't show that you are not being successful in your farm enterprise?
So exactly, and that's just the same thing basically. It's just like getting a loan or trying to have someone invest in your company. No one wants to invest if you are not bringing back a profit, if you're not making a profit, because they feel like if you lost your money, then you're going to lose their money, and then how are they going to get their money back? How are you going to repay them? So it would be unlikely that someone would be interested in investing or issuing any type of loans to that
Okay.
business.
So I have another question. If you have a
Mhm.
home on the farm, can you write off any home repair?
If you're using part of the home for the purpose of the farm, then yes, you can. Just like with a business Schedule C, some people may not have like an actual business location, so they may have an office at home, so they're able to do a home office deduction.
So-
Basically, that requires giving like the square footage of the home, what part of the home or square footage of the home is being used, and things of that nature. Yes.
Ms. Smith, Ms. Marjorie Smith, you have a question? I see you unmuted.
No, sir, I'm sorry.
Oh, that's okay. Just go ahead and just, Don, you have a question? No? All right. What about Deborah? You have a question? All right. Any questions? Any more questions, guys?
Yes.
Go right ahead.
Good morning. I hope everyone is well this morning, and thanks for this seminar on taxes for farmers. My question, this is Lamar. My question is, we kind of glossed over it in the last session. The question is, what are the advantages, or when you juxtapose the LLC and the S Corp, I don't want to say disadvantages. I guess I want to ask, what are the differences in filing as just an LLC as juxtaposed to an S Corp?
So basically, a LLC, with an LLC, say if you have payroll and you're paying yourself or you're paying people, is looked at as basically is looked at as ordinary income, like you're deducting, is a deduction that you're taking out of your business for yourself, and it's taxed differently. It's taxed differently than it would be in an S Corp, because the IRS recognizes a LLC to be basically it's a limited liability company. So you have that self-employment tax that is actually a higher rate than the S Corp, and that is because, again, the income that is taken from the business is viewed differently than it would be from a S Corp by the IRS.
So I had another question from Ms. Angela Wright. So she said, and I guess just to validate, you can't write off office space, correct?
Mm-hmm.
Ms. Rachel, can you give maybe like an example? Can you give maybe like an example when you said the self-employment from the LLC is a higher rate income from the business? Because and the reason I'm sitting on this question is because I know, I have heard where people say it's, and I don't want to use better, but they say it's more of an advantage when you do an S Corp, especially when it comes to taxes. And as a new business owner, I guess I'm wondering, like, what are, just some examples as a business owner and as a farmer, what would be some examples in the differences when you file as an LLC juxtaposed to an S corp?
Right, so again, LLC basically covers, LLC protects the person, basically. So LLC, it doesn't recognize, I'm gonna say it recognizes the income as business income, but it's different than a S corp, because again, the IRS, the way they look at and are the rules for LLC are different, and that's because any income that, say, you pay yourself, any funds that you deduct yourself, is looked at as I'm trying to think of the word, I'm sorry. I'm gonna have to probably come back to it. Anything you pay yourself and deduct from the business is basically looked at as like a personal income that you're just taking from the business. Whereas a S corp is actually funds paid out, is a wage. So you're separate from the business, versus with an LLC, you are the business. So the LLC only protects the person from the business. So therefore, someone can't come after you for your assets and things of that nature, your personal assets. Say if someone wants to sue your business, because again, you are the business, they'll be suing you. So the LLC is a limited liability corporation, which limits your liability to the company. So they will only be able to go after that. So that's the whole purpose of the LLC, whereas the S corp, it separates you, the person, from the business.
So I'm gonna have a expert in business filings, determining if you should be a LLC or S corp or another type of partnership with another person. Come and do a presentation on that pretty soon. So stay tuned for that, because I think I've heard from the last presentation we did last week and the presentation we're doing this week, that is very needed. So I'm gonna try to have somebody maybe go into detail and give more specific examples. As for filing them, that's pretty much what Ms. Rachel does. But as for constructing them and what's the best option for your company, you may need a more specified person. So I'll get that for you.
Did that answer your question though?
Lamar. Yes. And so the differentiation is between the I think what you said is the business and the person.
Right. Correct. Mm-hmm.
Thank you.
You're welcome.
All right, guys, how we doing? We got any more questions? I know it's tax season time. And Ms. Rachel, can you go to your last slide and show them the contact information again?
Can I ask one last question before we
ask as
go?
many as you need.
Okay, I'm sorry, I keep harping on that rental property, but what if that's the only income that I have from the farm? Do I put it on my income tax? I just rent the whole farm out.
You said that's the only income you have?
From the farm part.
Okay, so therefore, that's not something that you would need to file.
I still don't need to put it on the file.
No, because it's not going to be taxable. And like I said, the way that you've been filing it has been rental income. So that's like someone who purchased homes, a realtor, who purchased homes and then they rent them. They would file that form.
Can I ask a question? Do you do any farming on your property at all?
No, I just rent the whole farm
You just
out.
rent the farm.
She's renting
you're
it
not
out
a
to
farmer
someone
anymore.
else.
You're a lease. You're a manager. You're a renter. You have rental property. So you no longer a farmer. Okay.
I'm no longer a farmer.
So if you're not the farmer, and I guess the person that's renting the space is the farmer, then you would be correct in filing the Schedule E for rental property income or loss of rental property.
Oh, Okay, the person gives me a 1099 every year. I receive a 1099 from the person that I rent it to. Okay.
Okay.
So it counts as income?
Yes.
Is that what I'm
It
hearing?
counts as rental income. Yes, ma'am.
All right, thank you.
You're welcome. And again, anything maintenance or anything like that, to the rental property that you have to pay for, the upkeep of the property, things of that nature. Of course, you can write those expenses off against whatever, profits or proceeds you're receiving from the rental property, which would decrease your overall gross rental income.
Like irrigation, I put in some irrigation material,
Mm-hmm. Yes. Anything, any costs, any expenses that, you provided for that property to function.
Okay.
Any other questions, guys?
Hi, yes, this is Angela Wright. I had the question about the home and any repairs and if there were any deductibles as relates to that. And I do understand that you can write off an office space, but we actually bought a house last year, halfway through. It's on about 9 acres, 7 acres was being leased out. So we continue to do that. And the house sits on 1.3 acres, but it needs some repairs. In order for us to be able to write off an office, we'll have to extend the house, have like an addition or something. And that's what I was asking about, meaning if we were to make repairs, any repairs that we make to the house, that would then begin to include us having a space for an office. Can we write off the repairs or just the basic write off for an office space?
So you don't have to add any additions to the home to write off a home office. It can be a bedroom. It can be a space that you're occupying as an office space. It doesn't have to be in addition. Any repairs, I would say basically what I do when it comes to home office for my clients is any utilities, repairs and things of that nature. I would take whatever percentage of that home they're using as an office for utilities and things of that nature. I take that same percentage and I from like the utilities or whatever, and I put that portion toward the business.
Correct. I guess I'm saying in addition to that, we are going to make repairs. So you're saying that we cannot write the repairs off, only the office space, correct?
What you could do, are the repairs for the home, are you using it for part of the business?
Yes. Can you hear me?
So if you're using it for part of the business, whatever portion of the business you're using, I can now, something happened and it went blank for a minute, but I can hear you now.
Okay.
The additions that you're making, whatever percentage of that addition that you're using toward the business, then yeah, you can write that portion off for the business, toward the business.
Okay. So the house is not looked at as like, say, for instance, a barn or a shed. It's not looked at like that. Say, it's not looked at like that, correct? It's just a house. It's not considered part of the farm, correct? As an asset, it's not, correct?
You're saying that, yeah. So you are a farmer?
Yes, we are. Yeah, we've registered ourselves, the space, as a farm.
Are you doing
Okay.
any farming on your land?
We will be this year, and we're leasing out. We lease out 7 acres. Yes.
Okay, so you lease out part of the property. You live in the home, which is 1 acre. What I'm hearing, Ms. Rachel, isn't that okay? So I have 100% of my house, but I'm using 25% as my business. That I can take. Any repairs I do to that house, I can use 25% of that because that's part of my property that I'm using for the business. Also, the house itself, if I pay utilities, I can use 25% of that towards my business. And anything else I do towards that house, it would be 25% of. Am I correct?
All right, yes.
So if she lives in the house and she lives there 100% of the time, but 25% of the time she's doing business there, 25% of that is her business. She can go ahead and claim 25% of the repairs, 25% of everything else that's in there. So that sounds feasible, but I'm not the accountant, the bookkeeper.
And you hit it right on.
Well,
That,
yes,
that's what I'm trying to find out.
Pretty
You
much,
got it.
yeah, that's,
I'm trying to find that out. Exactly. You got it. That's
well,
what I
yeah,
want to know.
that's what I was.
You're
Is that
breaking
not
up,
what I
Miss-
said? I'm sorry.
You're breaking up.
Huh?
You was breaking
No,
up.
I was
What
just
you
saying, is
said?
that not what I said?
Yes, that's
I
what you
was
were
saying, is
saying.
that
It
not
was
what
just a
or
meeting
maybe
of
I
the.
wasn't clear.
No, it was just a meeting.
Huh?
It's language. That's all. We good. I think we all
okay.
understand now, right?
Thank you. Yeah. So I'm gonna do some repairs to this house. It's an old house, meaning no HVAC, meaning it's an old house that we live in. We have to make some upgrades. The office will be included, so therefore 25% of our investing to upgrade this house, it can be toward office.
Yes.
Okay, I'm good. Thank you.
Mhm, you're welcome.
That was good. I like that. Okay. I have another. I don't know if it's a question, but wouldn't that be any actual money she put out that was not covered by any government assistance, like from NRCS? I think NRCS will give you funds, but they're going to calculate your funds that they're going to give you, that any loans that you make. You want to understand towards.
Can
Go
you
ahead.
say that again, Brian?
It's in the
sounds a little
chat.
bit
Pull up your chat. It's the last question in the chat.
Okay.
And it was actually addressed to the previous caller that was renting her property, not Angela, the one before that. You know how there's a cost share with NRCS and some of the other government entities. So I was saying the way it was explained, it was almost explained like the whole amount of money could be deducted, be used on her taxes, be a deduction. And I was trying to clarify just a portion that she actually invested.
Right. So you're asking any governmental assistance that she may receive for these repairs. You're asking basically, could she use some of those expenses to write off? If it's something funded by the government, then no, she can't, because it will have to be claimed as income in order to be an expense against income. So no, if it's government assistance, then no, because it wouldn't even be income. Any funds personally from her, then yes, that can be written off.
Right, because the portion I was talking about was the portion that because like with the cost share, it's like 90% they pay and 10% you pay. So I was saying the portion that she paid, would she be able to deduct that?
Yes. Mhm.
Okay, that's the part I was trying to get clarification on, because the way it was asked and answered, it seemed like, any part of it and all of it. But I was saying, if you didn't put it in, then you can't. Right, exactly.
Right. Mhm.
Okay, thank you.
You're welcome.
Ms. Murphy asked, we have an office space in our house. We are building a shed on the farm for our tools and products. Can those building materials be included as farm expense?
Yes, they can be included as farm expense, because it's something you're doing for the business, which is the farm that you're going to be using that shed for that purpose. So yes, you may write off those expenses.
How many of you guys have a dedicated bookkeeper, accountant, and our tax person that deals with your taxes when it relates to form and understanding form nuances? And just do I do, or you're looking for one, or whatever. So I understand that when we work on forms, we are not actually near community centers, areas where there are professionals like this. But this professional here can really help you guys out. So remember that when, because I don't think we can answer all the questions that you have, or all the things that you may have. She can actually be a good assistant to you. I vetted her out very well. I looked for people who had common knowledge in this area. So please utilize her as a tool when doing your taxes, because I too own a business, and I keep my accounting bookkeeper and my tax person abreast of what's going on from month to month, so that we don't have any issues with the federal government in the future. You don't want them to come back and say levy a tax on you later. So she and my experience is pretty good. I want to make sure that you have a good professional that has good knowledge in this area. Any questions that you do have, I'm sure she can answer today. And if she doesn't have time, if y'all don't ask them today, please copy her contact information down. I do want to let you know future topics. We're looking at doing something on the American Rescue Plan. We are also going to do something on grant opportunities, whether they are governmental or state or local. And then I want to also do something on creating LLCs and those type of things. So we're going to have those things in the future. I want you to be aware and have that ready and look out for that. I appreciate everyone sticking with us, because you didn't have to spend your lunchtime doing this today. So we were happy that you attended. And also, I'm going to shoot my contact information so that if you, and I think that you all may have gotten my contact information. Yes, Ms. Thomas provides advisory ongoing service, and she prepares taxes at the end of the year also. She's very good at what she does. And like I said, you can't have a job with the state of Louisiana and not learn the job well. So she worked with DOTD, which deals with land and property rights and all those different issues and grants. So please hit her up. I myself, if I shot you email and you saw saw the flyer, my contact information is there. Shoot me an email, say, hey, look, we're looking for this topic. I don't have enough knowledge on it, and we need to, because we want to advance your farms beyond just mom and pop. We want something you can have a legacy to leave to your kids that's a functioning business. Those of you who know people who aren't running, they're running the farm, but they're not running their farm business. Let me give them my contact information, because we're going to have our small farm academy, where we help develop business plans and things of that, so you can have those opportunities in the future. We want to make sure that we have everything a person needs to run a business. Me and Ms. Thomas been knowing each other, been friends for years, and we talk business all the time. If you don't talk business, you don't have, you're not about your business. So talk business.
Yes.
Anything else, guys? I want to ask her why she's with us. We have another 15 minutes. If not, we can, she has our contact information. Anything you want to leave them with, Ms. Thomas?
Any other contact information you said?
Yeah, you want to tell them anything else?
Well, everything is here. I'm available. If you guys have any questions, would like to stop by, would like to, if you have a bookkeeper, a tax preparer, if you would like to just have a consultation, it's free. Feel free to stop by.
She's behind. If you didn't know, you know what
I have a
Cox
question.
is. I'm sorry. Go ahead.
I have a question.
Mhm.
I was late getting on, but as a landowner, or property owner or farmer, what are some of the things we should think about keeping so that we would know what is tax exemptable, or what receipts should we keep? What are some of the things to make it easier for the tax preparer when we come into the office to get our taxes prepared?
Good
Well,
question.
that's any records that you receive for anything that you purchase, any thing that you sell, any revenues, basically anything from, again, sales, whatever records you receive, you want to keep on hand.
Is it like a ticket or sales ticket, or is it a
It can be a sales ticket, it can be an invoice, it could be a receipt. You just go purchase something from Walmart, you go purchase something from a store for the business, then you want to keep record of that. You want to keep those receipts. give them to your accountant, bookkeeper. You want to, anything, basically, any sales, if you're giving someone, a receipt for something that they're paying you for, then you want to keep a copy of that. If you're invoicing a client or a customer, you want to keep a copy of that also.
All right,
Good
thanks.
Good question.
You're welcome.
I think we have one more question. We are sure. Oh, okay, so I will cover your needs in estate planning and farm planning. We'll cover that in the future. We do have that on our agenda. Anything else you want to tell them, Ms. Rachel?
I'm just that I'm here and I'm open for all questions. Anything you guys have, just throw it at me. If I don't know it right offhand, I'll look it up, whatever I need to do to make sure you get the information that you need. But I'm here and available. You guys have my office number and also my cell. So I'm always reachable, whether it's tax season or it's not tax season, which is one of the things that my clients love because it's like hands-on. They can text me and call me at all hours. So I'm here.
Well, guys, thank you for participating. And if you have any more questions, you can, those who do, you can stay on. Those who don't, y'all can leave. We can talk in the future. My contact information, I just posted at the bottom. I will have the recordings set up, but I need to edit them first before I post them so that we can have fluidity in what we present. Thank you guys again.
Thank you. Thank you, everyone.
Thank you, Ms. Rachel.
You're welcome. And you guys be sure to check out the website, see some of the other services that we offer also that may be of assistance to you.
Thank you. This was awesome. Thank you so much.
You're welcome.